It's such a big pleasure to have all of you. So maybe without much ado, since we are on time, allow me to, on my own behalf, introduce myself to you. I'll be a moderator for today's discussion. My name is Gerald Biarugaba. I work with Oxfam in Africa. I am based in Kampala, Uganda, and I will be moderating today's discussion. As I indicated, my work focuses more on governance of natural resources and promoting fiscal justice on the African continent. It's my pleasure to welcome you. But before all of that, let me also take the pleasure to introduce our speakers for the day. We will have we'll have first a welcoming remarks from our own Director Programs and Influencing for Oxfam in Africa. That's Mr. Odes Kubuimana. He's already live with us. Then we'll be having a presentation on the United Nations Guiding Principles on Taxation of Wealth from an expert, Mr. Abdul Mohit Chaudhary. We'll also be having remarks from a distinguished speaker, Mr. Daniel Nuer, who is a tax policy who is an expert in the tax policy units of the Ministry of Finance in Ghana. We'll then be hearing from Ms. Chelangat Sarah Muzungyo, Commissioner for Domestic Taxes at the Uganda Revenue Authority in Uganda. We'll also be joined by Mr. Waiswa Ronald, who is an expert working with the Africa Tax Administration Forum. To you, Mr. Michael Maura, Chief Manager, Large Taxpayers Office with the Kenya Revenue Authority, and some brief remarks from Mr. Philip Wairire as well from the Kenya Revenue Authority, Manager Litigation Affairs, as well as Ms. Chenai Mukumba, the Executive Director for Tax Justice Network Africa. And then all of you that have made time to join this discussion, it's such an honor to have you all. And without much ado, at this point, I will welcome you, Mr. Odes Kubuimana, to speak to us and give us your opening remarks to get us started. Over to you, Mr. Odes.
Thank you, Gerard. You hear me?
Can hear you very well. Go right ahead, please.
Very good. Thanks. And thanks everyone who joined. I want to first thank the organizers of this very important meeting. Gerard and colleagues who have been putting this together, but also Oxfam in Africa partners who are with us in this. I also want to especially thank country leaders, government partners from Kenya, from Uganda, and Ghana who are here to also share with us different experiences. I think when we talk about inequality and taxing wealth, for Africa, for me, I think it's important for two reasons. One being that I think Africa is one probably continent that suffer the most from the unequal global system, the global system that is really unequal. So that is really globally across the global system. But more importantly, Africa is also internally one of the regions where we see the most of inequality internally. So you are suffering from the unequal global unequal system, a global system of inequality, but internally you are also suffering from your own internal inequality. And that is something that is visible from different data that are actually Oxfam data, but also data that come from other different stakeholders and partners. And then one of the figures that is shocking is when you hear that 7 African wealthiest people hold the wealth that is bigger than the wealth of half of the African population. Only 7. That is really telling how unequal our wealth is distributed. You also see data confirming that among 10 unequal countries worldwide, 8 are in Africa. So that's enough really to tell how inequality is also an internal problem to Africa, and therefore for me this discussion is central, especially that this discussion that aims at getting us to two things: to understand the problem, because also I think there is different levels of understanding of this problem, but also not only just understand the problem, but also to generate policies, to generate proposals that can inform action that take us out of this inequality crisis. If we were to address inequality, if we were to properly tax the wealth, also figures tell what would be able to achieve. For example, you will hear that if Kenya was to properly tax wealth, they would be able to raise more than 700 million in their treasury. And that's Kenya. When you look at Nigeria, for example, they would be able to raise 10 times more than that. And what it means in terms of what they would be able to do, they would be able to double, for example, what they do, the service they provide to their citizens in the health sector, for example. So adequate, proper taxation of the wealth could solve most of the problems Africa has today. That's why I think this conversation is critical for us. And I think, not to be only too negative, we have a few things that should encourage us as we engage in this conversation and develop proposals and policy propositions. There's a growing trend where we see this topic, wealth taxation, being really taken up by critical people, key people, like head of states, referring to this as a critical way to solve most of the current problems. We've even seen billionaires really speaking to wealth taxation. I was telling my colleagues in our inequality campaign that how do you manage to convince a billionaire to speak to our inequality campaign? Because I see some of the tweets that Oxfam posts. It's billionaires from Australia, from somewhere else, really speaking to this, confirming that this is the way to go. I think that's encouraging. If heads of states are referring to this as a way to fill the gap, the funding gap in different social services. Economists have taken this up. In a recent meeting organized by Oxfam, I remember one professor from Ghana was really speaking to wealth taxation. And I think it is out of these efforts we are making to say we should keep doing it. So I also think when you look at different countries, governments have started putting in place some measures to really go about this. You will hear that in Uganda, for example, the tax administration office has established a unit that is only looking at wealth taxation. That's encouraging. Those are the stories we should also tell ourselves to encourage us to keep fighting, because we are not doing it in vain. So I really want to say that this is a very critical conversation, and at your time, I see more than 60 people. I think you've made a good decision in terms of the best use of your time now, and I really encourage you to contribute. And I hope that by the end of this conversation, not only we have learned, but we also develop something that we can share with those who are supposed to act. Without much ado, and because I think the most important is yet to come from different presentations, I just want to again thank you, everyone. Thank Gerard and the team and partners, and our partners from different governments in the room, and every one of you who took time to come and listen in and contribute. And on behalf of some in Africa and partners, I wish all of us a very fruitful engagement. Thank you.
Excellent, excellent, Mr. Odess. We are clapping for you virtually. Thank you very much for starting us off and indeed indicating the importance of wealth taxation in fighting inequality and the efforts that a few governments that you have highlighted have put in place to be able to tax wealth tax the rich and be able to generate income that could be useful in provision of social services that we know are helpful in fighting inequality. So thank you once again. And now, without much ado, may I invite our expert presenter for today, our lead expert presenter for today, Mr. Abdul Muhit Chaudhary, to speak to us. As Mr. Abdul is getting ready, I'll just say a few things about him so that we all know the person that is speaking to us and that we'll be speaking to. Mr. Abdul is a senior program officer and leads the institution of South Center Tax Initiative based in Geneva in Switzerland. He is a member of the United Nations Tax Committee or Subcommittee on Wealth and Solidarity Taxes, also the co-chair of Think 20 Brazil subgroup on the reform of international tax architecture. He's a member of the Base Erosion and Profit Shifting Monitoring Group, and also on the steering group of the Independent Commission for the Reform of International Corporate Taxation. He previously served in India's Ministry of External Affairs, where he was in the Policy Planning and Research Division, specializing in economic strategy. Mr. Abdul was formerly a consultant of the United Nations and also worked as a legislative ID in the parliaments of India. He specialized in tax and financial law. He has a master's in political science from Jawaharlal Nehru University in New Delhi, India, diploma in international tax law from Indian Academy of International Law, and a diploma and advanced diploma in international taxation from the Chartered Institute of Taxation in the UK. Mr. Abdul, please speak to us about the guidelines of the United Nations on taxing wealth and try to lead us onto the conversation on what implications this might have for African countries. You're welcome to speak to us.
Thank you so much, Gerald, for that very kind introduction, and my deep thanks to Oxfam Africa for this invitation. It's really an honor to be here. Thank you so much, Asante Sana, in different languages. And really, thank you for organizing this really critical event, very timely, especially given the discussion which are happening in the UN Framework Convention on International Taxation and as well as the G20. So without further ado, let me share my presentation. If I may be allowed, I need the permission actually.
Ma'am, kindly assist Mr. Abdul to be able to share a presentation.
Yes, thank you. So hope you can all see. Yes. So thank you once again to dear Gerald for this invitation and to Oxfam. So let's start by looking at the evidence. So this is data as of 2022 from the World Inequality Lab. And what this basically tells you is, if you look at the wealth of a country, the personal wealth, how much of that is owned by the top 10%? And the basic thing you need to look at is that the darker the color, the more of the wealth is owned by the top 10%, and the lighter the color, the less wealth is owned by the top 10%. So if you look here at Africa, we can immediately see that North of and West Africa has a lighter color, and Central and South Africa has a darker color, which means that the top 10% own more of the wealth in Southern Africa and in Central Africa compared to Northern Africa, West and East Africa. So in more detail, that means that if you look at Southern Africa, around 70 to 90% of the wealth is owned by the top 10%, and the same is true for Central Africa. So let's look at that along with some other facts. One fact is that no sub-Saharan African country actually has a wealth tax. In fact, I think Algeria maybe is the only African country which has a wealth tax. So there's a lot of potential to introduce these taxes. And it was good to hear that in Ghana, there is such a consideration to introduce wealth taxes. And within that, it's helpful to look at the most unequal countries. So Central and Southern African countries really come up as the immediate candidates where some priority action could be taken. And if we compare that with the latest economic research, what we can see is that reducing inequality is more effective in reducing extreme poverty compared to increasing growth rates. And this is really important, so let me repeat that once. Reducing inequality is more effective in reducing extreme poverty compared to increasing growth rates. This is important because the conventional wisdom is that if you want to get your country out of poverty, you need to increase GDP growth. So even if that means that inequalities exacerbate, that's okay, because at least you can have more growth and then come out of poverty. But the research is now showing that reducing a country's Gini index, so the Gini index essentially measures income inequality, reducing each country's Gini index by 1% per year has a larger impact on poverty reduction than increasing each country's annual growth rate by 1 percentage point. So this means that reducing inequality can really have direct effects on reducing extreme poverty. And as many developing countries, extreme poverty for us is a priority, and this is good news because it means that reducing inequality and poverty are not a trade-off, but rather reducing inequality can directly help us reduce poverty faster than increasing growth rates. Now let's look at some more data. How much wealth tax can be collected from the rich in Africa? So this is data again, it's a bit old, it's 2021, but unfortunately we don't have more recent data for the whole continent. So this is from the World Inequality Report, and this tells you that in sub-Saharan Africa in 2021, there are 243,000 adults who have wealth which is valued at more than $1 million. As of 2021, there are 243,220 adults in sub-Saharan Africa with wealth more than 1 million. And the total value of this wealth is $726 billion. And you have various simulations, but if you look at the maximum, the World Inequality Report did a 2.2% simulation, and they found that would give revenues which are equivalent to 0.7% of global income. Now, global income in 2021 was around $122 trillion. So that comes to around $0.8 trillion. So effectively, if you tax the millionaires, all the millionaires in Africa at an effective tax rate of 2.2%, that can give you around $0.8 trillion in tax collection, which is quite a significant amount of money. So that is your very preliminary revenue estimates, but we do need more research on this. So policymakers like the ones at this important event today can have a better sense of how much money can they actually get from having a wealth tax. So the central problem of wealth taxation is not so much of what we want to do, but how do we do it? Because then you run into all kinds of technical questions like how do we value assets? How do we determine the tax base? How do we get data on how much wealth the rich actually own? Because a lot of this wealth is in assets, stocks, shares, which are often kept in tax havens, and getting that kind of data is, difficult when you have political influence. So countries really need practical guidance on how do you actually implement a wealth tax. For this reason, the United Nations took up this issue, and the United Nations Tax Committee has a 4-year work plan. So every time you have a new membership, they decide what they will do during their membership, and their membership runs for 4 years. And the current committee, they came into office in 2021. So when they decided their work plan, they thought wealth taxation is a key priority. It should, we need to come out with some guidance on this. And accordingly, they formed a subcommittee. And the subcommittee has already finalized their guidelines for taxing wealth, which is what I'm going to spend some time on, with an emphasis on practical guidance. But they didn't just stop there. One of the demands from many developing countries was that guidelines are helpful, but what would be more helpful would be to have a model legislation which we can use to bring in a wealth tax in our own countries. So drawing upon the guidelines, those have been kind of summarized into a model legislation, which is now almost complete by the UN Tax Committee, and I'm going to present the model legislation to you as well. So let me share my screen once again. Yes, so let's have a look at the guidelines first, and it's helpful to look at the document directly. So this guidance was approved in March this year. And let me give you a short flavor of what you can find inside. So you have chapter 1, which looks at the rationale behind wealth taxes. So why do you need wealth taxes? Because first you need a policy decision that we need wealth taxes. And for that, you need to know what are the pros and cons. So this basically contains what is the rationale for taxing wealth and what are the advantages and disadvantages. Then the second chapter of the guidelines looks at different kinds of wealth taxes, because you have taxes on the flow of wealth. So these are capital income taxes. So for example, if you own land, that is the stock of wealth. But if you derive rental income from the land, that is the return on the wealth that you own, which would be capital income. So for example, interest or dividends, when you own a share and the share gives you a dividend, that is capital income. When you sell the share, that is capital gains, that is another kind of capital income. If you own intellectual property and then somebody pays you royalties for that, that is capital income. Then if you derive rent from your land, that is one example of income from immovable property. If you have a movable property and like, let's say a car, and you lease that out and then you derive lease income from that, that is again a kind of capital income. So these are different kinds of income which you derive from the ownership of capital. So that is one kind of wealth tax. Then you have different taxes on the transfer of wealth. So you have inheritance taxes. So if you hand over your property to your next generation, that is a kind of inheritance tax. You have gift taxes. So if you just, sometimes some countries, if you give just money from your bank account to your family members, that could be taxed as gift if it exceeds a certain threshold. Then ownership of estate is also taxed. When these are transferred, you have estate taxes. And then you have taxes on the stock of wealth, which is your ownership. So then basically these are just because you own property, you have to pay tax on that. So you have your property taxes as an example of taxes on immovable property. And then you have recurrent taxes on movable property, both tangible and intangible. And finally, you have net wealth taxes. So net wealth taxes looks at the total value of your assets, and from that you subtract liabilities, for example, debts and so on. And then the remaining bulk of the net wealth is the tax base on which you have to pay taxes. So this brief introduction to different kinds of taxes of wealth. Then to help policymakers kind of decide whether to introduce or update their existing wealth tax law, we brought in certain considerations. And again, these relate to the different types of taxes, which are capital income, taxes on the transfer of wealth, and recurrent taxes on movable and immovable property. So these go into details on the kinds of considerations which policymakers should think about as to who should pay the tax, when should they pay the tax, what should be the tax base, should there be threshold, what should be the rate, and all of these questions. Now, chapters 4 and chapter 5 are, you can say, the bulk of the guidelines, the essence. So chapter 4 is practical guidance for the implementation of net wealth taxes on individuals. So these tell you, first of all, whether you should have a wealth tax. So these are, again, the considerations, how you can do an impact assessment so that you can figure out how much money you will actually get from having such a tax. Then who should be the taxpayers? When should they pay the tax? What should they pay the tax on? What is the tax base? Should there be any exemptions? And then we also look at questions like how do you deal with pensions? How do you deal with business assets? Then what should be the thresholds? Because do you want to target only the rich? If so, what does that mean? Do you want to have a progressive approach? And do you want to have a flat rate? So these are some questions on thresholds and tax rates. And then we look at some other technical issues like liquidity and timing. For example, what if the person doesn't have the money immediately to actually pay the tax? So how do you deal with these liquidity issues? And then how do you deal with double taxation? Because you can have a situation where somebody is paying an income tax and a wealth tax, but it's in a way the same thing. So that could lead to a kind of economic double taxation, especially when two jurisdictions are involved. So how do you deal with that issue? And then how do you deal with cross-border issues? So these are some of the considerations contained in chapter 4. And then chapter 5 looks at guidance on the implementation of exceptional solidarity net wealth taxes on individuals. Now, if you see the context, the UN Tax Committee's membership came in 2021, which is when we still had COVID. And in fact, they couldn't meet in person. They had to meet online for, I think, maybe a couple of years until they could start meeting in person. And one of the big questions that time countries were dealing with was, how do we get the money to pay for the COVID crisis?
Put it on.
For that reason, a lot of countries had kind of introduced an exceptional solidarity tax to pay for the COVID crisis. But this is something which can happen in various countries. You have a war, you have an earthquake, you have a natural disaster. So you have some exceptional event, and the government quickly needs money to pay to deal with that problem. And for that reason, you have these exceptional solidarity net wealth taxes. So you have similar practical considerations for how do you design such a tax as well. Then chapter 6 is on how do you administer it. For example, how do you value it? And how do you get the information which you need? Which are the authorities involved? How do you actually collect such a tax? How do you deal with compliance? What if there are disputes? How can the taxpayer appeal? One important issue is capital flight or exit taxes. For example, you bring in these wealth taxes and the rich taxpayer runs away to another country. They change their tax residency. So to act as a disincentive, some countries have an exit tax. So what can that look like? How do you deal with tax evasion, and how do you look at interaction with different taxes? So these are some of the questions which we have tried to address in these guidelines within the UN Tax Subcommittee on Wealth Taxes. And then we conclude with basically 3 appendixes. So one is a methodology for carrying out revenue estimates on net wealth taxes. The second are the legislative elements for net wealth taxes, which later on became the model law, which I'm going to present after this. And finally, we have country experiences of one global north country, which is Norway, and one global south country, which is Colombia. So we look at what was the experience of these countries in actually implementing wealth taxes. So that was a brief summary of the guidelines, and now I'm going to present the model law. And after that, we will come to the end of the presentation. 1 second, please. Okay, so now we are looking at the model legislation itself. So this is called the UN's template law for a net wealth tax on individuals. And as mentioned, this is a kind of summary of the guidelines. So you don't need to read those 100 plus pages. And you can just look at the model law and you can use that to bring it as a law in your own country. So we start out with a preamble or a foreword. So this essentially talks about the objective and that this is meant to give guidance to countries. It draws upon best practices and it can act as a tool for technical assistance. And this is really meant to be seen in conjunction with the guidelines, because this draws upon the guidelines. In some ways, there's a summary of the guidelines. So the best way to get more details on what the different provisions mean is to refer to the guidelines. And again, this is not yet final. It was presented to the UN Tax Committee in October last month for a first reading, and hopefully next year in March, it should be finalized. So what I'm presenting is still a draft. It is not yet a final product, but this is publicly available. So this is the draft as it exists right now. So yes, so we have a preamble. And then chapter 1 are the enabling provisions. So article 1 looks at the jurisdiction. What is the scope of application of this wealth tax? Article 2 looks at the definitions, like what does asset mean, what does fiscal year mean, and so on. What does net wealth mean, and etc. Chapter 2 looks at the imposition. So article 3 looks at the charge, meaning that you actually have to pay the wealth tax. Then article 4 looks at the taxpayer. Who is the taxpayer? Article 5 looks at the tax base. So what are the assets on which this tax will be levied? Article 6 looks at the liabilities. For example, if you have a debt or some other liability that will be deducted from the tax base to compute net wealth. Article 7 looks at the assets which are situated in the territory of that country, to which, so this is in a way you can look at it as a sourcing rule. Article 8 looks at the exemptions to which the net wealth tax will not apply. So, for example, residence, personal effects like furniture and some kind of investments. So these are basically exempted. Valuation, as I mentioned, was a big question which many countries had. How do you actually value wealth? You have a lot of different approaches, so we tried to standardize that. So Article 9 looks at the valuation rules. And Article 10 looks at the tax rates. Now, the United Nations doesn't prescribe a tax rate. It leaves it blank because these are guidances and options for countries to use. So these have been left blank for countries to think about. Article 11 is a relief from international double taxation. So let's say you have somebody from the US who owns property in Pakistan. So what if that person derives rental income from the property in Pakistan, but is a tax resident of the US? So both Pakistan is taxing him on that rental income, and the US is also taxing him on the rental income. So how do you deal with such kind of relief from double taxation? Or alternatively, you have basically somebody from Ghana who owns an asset which is located in another country, let's say Cameroon. So how do you deal with issues of wealth taxation where both countries basically try to tax the ownership of the asset? So that kind of relief from double taxation is dealt with in this article. Then Chapter 3 looks at administration. So you have Article 12, which are the authorities which are involved in administering the tax. Article 13 gives some more details on the valuation procedures. Then we look at another practical aspect, which is on information reporting. So we tried to go with self-assessment so that the obligation falls on the taxpayer primarily to provide all of this data. Then Article 15 looks at who is obliged to file a tax return. Article 16 deals with confidentiality. Article 17 is on the submission of the declaration. Article 18 is on advanced payments, because in some countries, they require you to pay the tax in advance rather than at the end of the year. You have some provisions for that, so that you can pay the tax in installments. You don't have to pay everything all at once. So that option has been kept. Article 19 deals with penalties. So what happens if you don't pay? And Article 20 deals with how do the wealth tax authorities carry out the assessment. Article 21 looks at burden of proof. Beneficial ownership is a very important issue, as many of us would know. Who's the human being who really owns the asset? So it deals with some guidance on that. Then we come to the last chapter, and we are almost done. So Chapter 4, so Article 23 deals with general anti-avoidance. So this is meant to deal with issues of tax evasion and avoidance. Then similarly, sometimes taxpayers can, and these are rich people, so they can afford the best lawyers who can structure liabilities in such a way that the net wealth becomes zero. So how do you deal with those kinds of liabilities? Then Article 25 is how do you deal with access to information from different countries on where the assets are located. Trusts are one of the legal tools which are often misused to hide ownership of assets. So how do you deal with the abuse of trusts and other similar arrangements? And then we look at special ownership regimes like usufructs and so on. And then the last article is on exit taxes. So again, what if the taxpayer tries to run away and change the residency to avoid the wealth tax? So how do you deal with an exit tax to disincentivize that? So that is the summary of the model law. And with that, I'm very happy to take any comments and questions. And thank you once again for the invitation.
Thank you very much, Mr. Abdul, for this deep dive. You've summarized for us in a short time such deep conversation, such deep information about the guidelines on wealth taxation. But you also indicated that it's not a big number of people in Africa that have a lot of wealth at the beginning of your conversation. Now, to take this discussion forward, we want to dive into a bit of the country experiences on that, how it's playing out, taxing the rich, how it's playing out on the African continent. And just before I invite the next speaker, I want to encourage you colleagues to post any questions and comments that you may have on chat. If you have any questions, we will be able to pick them up and have the panelists respond to them. In the meantime, shall we go to the experience from Uganda, at the risk of being perceived as biased because I am from Uganda and I'm based in Kampala, but I'll invite our next speaker from Uganda, works with the Uganda Revenue Authority. So ma'am, kindly put up the presentation for the next speaker. Our next speaker is Ms. Sala Cherangat Muzunyo. She's the Commissioner for Domestic Taxes at Uganda Revenue Authority. Sarah is a member of the Institute of Public Accountants of Uganda. She's an affiliate of the Chartered Institute of Taxation in the United Kingdom, where she was awarded the Advanced Diploma in International Tax. Sarah holds a bachelor's degree in commerce, the accounting option from Makerere University, and a postgraduate diploma in income tax administration. She has a career that spans over 20 years, having started out in the Uganda Revenue Authority Domestic Taxes Department as a tax auditor. Sarah worked in the various divisions of the domestic tax department, namely in the audit, in the collection, in VAT refunds. She's an all-round expert. So we will welcome you, Sarah, to speak to us about the Ugandan experience when it comes to taxing the rich. What steps have you taken in Uganda? What can other countries learn from Uganda? Over to you, Sarah, for the next 10 or 15 minutes.
Thank you, Gerard. First and foremost, I want to take this opportunity to thank Oxfam for supporting us in the tax administration space in doing items of taxation and generally informing the world on what is happening in the tax space, areas of tax justice, tax injustice. These are really very good partners to tax administration. We thank you so much. I also want to thank our lead presenter, Mr. Abdul. Thank you so much, sir. We will go and download this. It's very good information for us in the tax administration space to follow up on this. And it's quite a good piece that we pick, especially in areas of valuation of the assets is very, very key. Somebody can have assets that are idle, and then you have assets that are generating business profits or some money for the individual. And then there are those other assets that you will be able to sell, and maybe they may be capital gains tax. There is also inheritance tax. It's quite a big space of tax that we need to really look at in terms of scope for taxing these high net worth individuals. So from the Uganda perspective, we have so far a good experience. We've started the high net worth office, and we now combine high net worth individuals together with the VIPs. VIPs mainly being politicians, and so we have put them together in the large taxpayers office, and it is a unit headed by a manager with 2 supervisors. One does the CRM role, and then the other supervisor does the compliance and audits. And then the CRM one does the revenue monitoring and relationship bit. On an overview, we see the collection of tax in this area. We cannot really say that we've gone very far, but we will just say that the journey has started. We are not yet at the destination because generally in Africa, like you indicated, we don't have really very rich people. But even the rich that we have, to really quantify their net worth still remains a very big problem because of the informalities and the fact that much of this money doesn't pass through the bank accounts. So I just to bring you back to perspective, in 2014 and 15, the IMF mission identified a considerable level of non-compliance among the large and medium taxpayers and recommended for a review and adjustment of segmentation. Now, based on these recommendations, URA created the public sector office in 2014. And this public sector office initially was housing the high net worth individuals because many of them were politicians or people who are really affiliated and working in public sector. And so because of that, we had to start doing some work around this. But by and large, we were really not getting much from these individuals. Let's go to the next slide, please. We're not getting much from these individuals. And so this type of segmentation is what also led us to do the segmentation for the high net worth individuals. And even further, separate the high net worth individuals who are largely individuals with no political affiliation, and then the VIPs who are largely politicians. So we separate these two teams, but what we can say is that most of the money comes from the high net worth individuals and not necessarily the politicians. Let's go to the next. So in the following years, we merged the high net worth individuals with the VIP, very important persons unit, and this was created in the large taxpayers office about 2 years ago. And the large taxpayers office is headed by an assistant commissioner. And the reason why we wanted it placed there is that we needed to approach these people with some level of professionalism, and even the type of people that handle them should be people who are informed, who are technically grounded, who can have the confidence to approach them, because some of them can be very intimidating, especially if it gets you when you are not very technically competent. So after realizing that both groups were homogeneous in nature and their operations tend to overlap, we put them together in the large taxpayers office. Let's go to the next slide, please. So in addition, both tend to be politically and economically influential. In Africa, if you are economically influential in terms of your net worth, it is very possible that you are also politically influential. And because of this, they also tend to have very busy lifestyles. So even getting a meeting with some of these high net worth individuals is quite a difficult task. The skills required to interact with them and manage their affairs are thus quite similar, and hence they need to manage them, and thus the journey that we have been having. Let's go to the next. So if we look at an outlook of this, so far we have a register of 1,629 individuals, with the VIPs being 270 and the high net worth individuals being 1,359. The register has grown by 17% over the 4 years, having migrations from the small stations back into this unit. The initial register was arrived at by majorly using a single criteria of asset worth. But later, we realized that was not very good, because assets is just one thing, but there are so many other things that could come through. For example, you may not have assets, but you end up inheriting, or you are a director in a number of businesses. So we look at it holistically. The initiative that began as a unit now operates as a section with a manager and 3 supervisors, as I've indicated, and a team of about 15 staff. We are still planning to recruit more of the teams, because even those 15 are not yet sufficient. The team handles the profiling and environmental scans for purposes of registration, and then also for purposes of determining their correct taxes and tracking their accuracy of the tax, reliability. We realized that most of the information that we get from these people will come from mainly newspapers, mainly from social media, and mainly from other third-party interactions. For example, you may get to know about somebody really being high net worth through some transactions. Maybe this person sold a piece of land or a piece of asset, and there was a withholding tax deducted, and then we are able to pick this. Let's go to the next. So justification for the high net worth section: insignificant and proportionate contribution in terms of personal taxes and filing of returns. Homogeneity of high net worth individuals and VIP. They are politically connected and appear to support politicians, can also seek safety from politicians. This is quite possible and very practical, because you may want to push this, and you find that there is also a cloud of some political networks within that. So, and like I was indicating to you, These are people who have power and they will work with politicians very well. They are also involved in trade but channel their earnings through real estate. You may find that a lot of money is in property, in land, and in areas where you cannot easily track. These individuals hide illicit wealth to avoid taxes because taxes will create some level of transparency. And so this is really what is making it very difficult for us even to chase some of these. Register property in names of proxies like children and relatives, and this makes the taxation also again very, very difficult. Many high net worth individuals are involved in sophisticated tax planning schemes and also outright evasion. There are very few who do actually the sophisticated tax planning schemes, because that would require that you have to get a tax advisor to support you. But others also will just do an outright evasion scheme. And then, sorry, we shall get the questions later. And then because of that, when you try and push to enforce, it also becomes very difficult considering their level of connections. Taxation of income and net wealth. Let's just scroll it. So identification, like I was telling you, most of the identification come through exchange of information using third-party transactions. Currently, because of automation and digitalization, we are able to get a lot of information from third parties. You are maybe dealing with a formalized business to transact. When that business is paying you, they will withhold. So we will track you based on that transaction. Or somehow we just get this information in news, in social media, and then we try and track you up. So all this is really important. Sometimes some of these people are profiled in different spaces, so we get this, even importation of goods, and then we are able to track you up. So we also look at observing their lifestyle. We have many of these high net worth individuals, people even in the entertainment sector, like musicians. We look at your lifestyle. You are buying a vehicle that is, in terms of net worth, over 700 million Uganda shillings, and then you are staying in a mansion, and some of these people, maybe you are doing a housewarming, and this information is all over social media. So then we are able to follow you up following such information. So deliberate effort to profile these individuals through taxpayer engagements and sensitization is ongoing, but we still have so many challenges. Number one is getting these appointments, and even when you get, the transparency or level of information that you get is not very sufficient. Collaboration with the central bank or even the financial institutions to track some payments received has also helped us a lot. And then working with Financial Intelligence Authority to track underdeclared individual bank accounts. Like I can say, this is still helpful but not sufficient, because like I indicated, most of the information, most of these people put their money in safes at home. Some of them keep them in whatever mode of storage, but so if the money doesn't come to the bank, it may become very difficult for us to pick it up. And then Ministry of Lands and working with the Land Commission to pick some of this information. We also pick this information from payments of stamp duty. Stamp duty is a non-tax revenue. So it's a fee. So when you are paying for your titles, then we pick this information and then we are able to track. However, we also have challenges in that area because some of these declarations of stamp duty are even underdeclared. Let's go to the next. You can see the parameters there. There is no universal definition of high net worth individual. Each tax administration globally defines them differently depending on their economic indicators. Here in Uganda, we use turnover contribution. If you have an individual business or if your income is more than 50 billion a year, then we categorize you as high net worth. You could be a director, a shareholder, etc. You could also have invested in assets over $1 billion and then undertake bank transactions of over $1 billion in your personal account. There we can call you high net worth. Obtain bank loans of over 5 billion over a period of 5 years. You have had transactions of at least $1 billion, buying and selling, sudden wealth inheritance, sale of land, compensation, etc. And then earning rental income of more than 500 million a year, own a home valued at over $1 billion, and then own motor vehicles over 500. If we can see all this in you, we can be able to say you are high net worth, including importation of goods of $1 billion. Let's go to the next. I'm almost done. So these are the trends of revenues that we've collected from these individuals in URA here. I have not yet updated. I could update the figures for 2023-24, but as you will see, there is a downward trend and an upward trend. Surprisingly, during COVID, you can see there was some good taxes collected, and then it goes down, goes up. Sometimes this could be impacted by capital gains tax, as I've included, because the one for 2020, there was some capital gains tax. So these figures are not really representative of the register. We still feel there is still a lot that we need to pick from these individuals. I do not think they are paying their fair share of tax. Let's go. What have we learned? The journey of monitoring these individuals has taught us a lot from lessons from which we can draw initiatives and interactions. Number one, once found on the wrong side, they always want to fix and then to be handled very professionally in a secret way. So you discuss with them and then you are able to get some money. Many of them would not love to come to our offices, so we will maybe go and wait for them, finish playing their golf match game, and then we meet them in a meeting room somewhere and then discuss. Or you pick them somewhere in their offices. They really, it is for looking for them. It is not easy that you can just give a call and you expect them to come. They feel catered to once visited and called. We need to call them, send them messages thanking them for paying tax, and then they will also freely contribute in terms of revenue mobilization. Usually in June and December, our fiscal year ends in June. When we call them up and ask them to give us a contribution, they will quickly give a deposit because they know that I would rather deposit this than be audited. So those are really, and it's also a negotiation, a way of negotiating. And then they deliberately conceal sources of income. They deny nearly every finding until proof is presented to them. You must really have proof for the information that will support you in taxing these individuals. And then they offer tips to many of their peers in a way to share the burden of taxation. They will tell you that, I think even as I pay, have you looked at this other businessman? We are almost in the same level. We want everyone to pay. So they will freely give you information which can help you also pick up some others. And then the designated accountants and auditors have sometimes misled them, but still, maybe it may not be even misleading, but you see, I will only base on the information given to file a return. This is a self-assessment regime. So when we find this other information, we realize there's some inconsistencies. Next. Yeah, so just to summarize, Gerard, what we can say is that we've started the journey. We cannot confirm that we've put everyone on the tax net. We can only say that every other time we are trying to increase this register. But even those who are paying are not paying their fair share of the tax because of limitation of information. But as and when we get information, we go out and engage these people. However, you need to get senior tax officers and people who are grounded technically to engage them and talk to them. And also, you can use relationships to support you in lobbying, in really negotiating. You can get one of their senior people or a friend who works closely with them to call them up. And they also like to just deal with the commissioner general level. They don't want to deal with these other junior officers. They want to feel that they are really important people. Thank you so much, Gerard. Let me stop there. I am very grateful for this opportunity to share. I wish you all a good day. I submit. Thank you.
Thank you very, very much, Salah. I wish I could, if you were here, I would shake your hand and clap for you, but I'm doing it virtually. You've really given us rich experience from Uganda, and I cannot go over what you presented already. Lessons, challenges with the dealing with these highly politically connected people. This exercise is turning you into a golf player, and perhaps you start crashing parties as well to be able to track people's wealth. But I can imagine how challenging it is. It's a daunting task for you indeed. And we also have some comments in chats from you, Tatenda Mzezewa from Zimbabwe, also highlighting the complexities of taxing the high net worth individuals in Zimbabwe and some of the policy recommendations that the government of Zimbabwe has indicated there, including a 1% tax on some of the assets in which they hide their assets typically. Now, we are 1 hour, we're halfway the discussion. I will now want us to cross over to the other part of the continent in Ghana, experience from Ghana, our colleague Daniel Noel, your own reflections on these presentations. Daniel is currently the head of the tax policy unit at the Ministry of Finance in Ghana. And should I mention, he's also stepping in for the Deputy Minister of Finance in Ghana. As some of you might know, it's a political season in Ghana. So our minister, because of different commitments, is not able to join us. But Daniel is stepping in. He's the head of the tax policy units in Ghana, the Ministry of Finance. His career as a public servant spans over 33 years experience in tax administration and policy. Daniel, his last assignment prior to taking up the position at the ministry, he was a monitoring and evaluation manager at the Ghana Revenue Authority. So pretty much the similar experience comparable to what Sarah has been doing. Daniel, in a few minutes, would you highlight for us your reflections on the presentation that both Abdul and Sarah made with the experiences from Ghana? Thank you.
Okay, good morning and good afternoon to some and good morning to others. And thank you, Osfam, for this opportunity. These platforms always help us to share experiences. And I think I'll say thank you to Abdul and Sarah for what they've also given us so far. Now, with the Ghana experience, I'll say that generally, we've had a high net worth office since 2017. I think it's one of the best kept secrets on the continent. And we have been evolving over that period. And recently, when we came out with our medium-term revenue strategy, 2024 to 2027, one of our main targets was to improve revenue from high net worth individuals. And that involved reviewing the current policy on high net worth individuals, estimating the revenue potential, and putting in measures to generally improve the revenue. And with that, we finished the draft of the document. We are finalizing it for approvals, and then we expect that 2025 will do a full rollout. So the work of the UN committee is very timely because there are a few things that we are picking from there in terms of some of the things we want to do. Because the question has been that if you are looking at high net worth individuals, do you use the normal income tax rates for them, or do you come out with a separate rate for them? Do you deal with them under current income tax legislation, or do you come out with alternative legislation? And all these things have some implications. And these are things that we actually address in our policy. Once we receive the go ahead, there are a few things that we believe will help. Because the debate of the different rates comes in because sometimes you want to combine incomes. You want to combine property rate, the property rate, other assets that they have. You want to look at the incomes they earn, and generally everything that contributes to their wealth. And when it comes to that, then you need to basically come out with different legislation or different approaches. But while we are waiting to do this, there are a few things we started working on in 2023. In 2023, we don't have a separate capital gains tax, but for individuals, you can opt to have, instead of adding it to your other incomes, you can opt to have a separate charge of the gains, whether it's from capital gain or even if it's a gift. The rate was around 10%, 15%, but in 2020, we increased it to 25%, just to get a little more, because it is understood that most of the people fall within this bracket are high income earners. We also introduced an additional income tax band for individuals, 35% income tax band. Previously, the highest was 30%. And then for incomes above 605,000 Ghana cedis, which might seem low, but is relatively high for some earners here. You pay at the 35% income tax band. And so, as we mentioned, we set up the high net worth of 2017. And over the past, after the post-pandemic period, there's been quite a jump in what the office has been collecting. In 2021, they collected approximately 21 million Ghana cedis. This shot up to 213 million Ghana cedis in 2022. Then it rose to 390 million in 2023. Now, one of the things we've done in 2024, and we expect that this will further increase, is that we've been receiving, we have qualified under the Global Forum for Exchange of Automatic Exchange of Information, Financial Information, and we've been receiving that information for a while, apart from sending. And in this year, 2024, we've started using that information to raise assessments on persons who have income from outside the country, which they have not declared. What we also did is that we have a voluntary disclosure program in our laws. So we also activated that so that anyone who comes forward with any information in terms of foreign assets that person has been declared and comes forward willingly, we waive the penalties and the interest and allow them just to pay the tax. We are getting some good progress so far. We are waiting a bit more. We are looking at the results. I'm sure when we look at our returns for high net worth individuals for 2024, it might be more than double what we obtained for 2023. And so generally, these are some of the things we are doing in Ghana. And we expect that some of the things that Sarah mentioned in terms of Uganda, when she talked about the number of staff, the political exposure, and all these things are very relevant and they are similar here. So what we are also looking at is increasing the number of persons in the unit and the GRE unit. So GRE is also revamping them. We are paying more manuals how to actually tackle high net worth individuals. The office, as I said, is a separate office. So that expansion, we expect that to be headed by a more senior person, maybe a deputy commissioner, so that there's a lot more action given to them. We've also established to help with data, which is very important in this. We have a data warehouse which we established. And as part of that, we are doing quite a number of data analysis, which allows for a collation of information from various sources into one. That also has started full swing from 2023. They have been even improving in terms of data. So that's also something which we are using that is helping in that regard. And so, as I said, we also exchanging information with other government entities. Then the registrar of companies has now established a BU, beneficial ownership register, which also allows us to get that information to use to follow up and determine who the high net worth individuals. I don't say I'm that much. I've gone through the criteria that we use, but generally for us, the high net worth individual is somebody, and I think the $1 million floor is international. The is international. Then there's the other thing we do is that so asset value of 1 million, that's enough. Anything above $1 million a year. So generally, these are things that we are looking at, and we expect that we'll do a lot more. I know that my time is not that much, so I'll basically stop here.
Thank you very much, Daniel. Thank you so much for sharing with us the experience of Ghana. You have a data warehouse, and you talked about the importance of exchange of information, but also revealed that you've had an office, secret office since 2017 that's working on these matters. So quite similar to the experience of Uganda, having a different unit to work on high net worth individuals. I cannot, I don't want to waste time going over your very important submissions there. Just as we move towards opening up the discussion, I can see a lot of conversations going on chat, and I really want to encourage that. Experiences from Zimbabwe on taxation of secondary residencies, and Sarah there trying to respond to that. From you, Henry, from Nigeria, wondering how the high-rise buildings in special places reach some of the, you called them, high-rise buildings that are occupied by gardeners and servants that are rarely occupied. How do we tax these? Because these are also indicators of worth of the owners. So kindly keep the conversation going on in chat and raise any quick questions and comments you have. It's exciting to have all of you about, it's a big audience here. This is a show of interest in the subject, and really I want us to keep going. We'll now cross over again back to East Africa and hear from experts from Kenya. Kenya, to speak to us from Kenya Revenue Authority is Mr. Michael Mwaura. Michael is the Chief Manager, the Premier Tax Office at the Kenya Revenue Authority. Michael has 19 years of experience in domestic taxes administration. He possesses a bachelor's degree in business administration. He's a certified public accountant in Kenya. Mr. Mwaura has previously served as accounts clerk in various SACCOs. And those of you know how big SACCOs are in Kenya. SACCO is really big business in Kenya. He has a postgraduate training in tax administration and customs at the Kenya Revenue Authority Training School, and has served in many task forces with the organization, particularly in system modernization and business process improvements. Michael, what has been the experience of Kenya, and how would you like to respond to the presentations by our speakers in a few minutes? Michael?
Gerald, am I audible?
Very, very well. Go ahead.
Thank you very much, and much appreciation for being hosted in these discussions. I think my previous two speakers have really brought a lot of interesting things for us to contemplate on. I think I'll go straight to the point. Maybe what I didn't indicate in the bio, I'm the chair of the Direct Taxes Committee under the ATA framework. So we work a lot with OiA and the rest of the people. Mine is to take up from where Uganda left. I think we share a lot of similarities in what we do. And maybe for your information, the Kenya Revenue Authority established a high net worth unit in 2019, and in 2021, it was renamed to the Premier Tax Office. Currently, it has about 1,391 taxpayers. We have two components, same as Uganda. There is a business unit and also what you call the politically exposed component, which has the politicians and the rest of senior government officials. Maybe in particular, we do have the executive, where we have the cabinet secretaries and the principal secretaries therein. In the legislature, we have the Supreme Court judges or justices and the High Court and the Court of Appeal judges. Then in the other field, we have the legislative, where the speakers of the house, 2 houses, and the governors, the 47 governors in Kenya, making up that unit. It's more of managing your PI, what is called VIPs, but also facilitating them. And the third key thing there is to bring their influence, so that if we are able to talk to them, then they can spread the message to their peers in terms of tax administration. I think the other thing I would want to just bring up maybe is on the issue of wealth taxation. I think a lot of thought needs to be put in there, because wealth in African countries has very different connotations, maybe from wealth in other jurisdictions or in other areas of the world. So wealth here might mean not revenue generating wealth, just maybe wealth for symbolism, wealth for just status, not actually as an economic power, and most probably maybe wealth that is passed on by inheritance. I'll give an example maybe of cultures like the Maasai culture in Kenya, where they have pride in owning large cattle, large livestock. So then if you want to attempt to tax them as a basis of wealth, then they don't even exchange it. Then you would have to have very, what do you call them? You really need to think through this kind of taxation in Africa, so that you don't bring a lot of disruption in the social and the cultural setup of many of us. So I don't want to speak much, maybe just to say that we are following the conversation. A lot is happening. Maybe one highlight is we as Kenya are undertaking a study with ATAP. We are among the 8 countries that ATAP, and maybe Ronald Waiswa will comment on it at some point, that are undertaking a study to establish who are these high net worth individuals, which parameters can we use, and is wealth tax one of the ways to deal with them, or can they be dealt with other modalities? So first is through the information gathering, facts, and I think one of the challenges is getting the actual facts on wealth, because wealth declarations are not in the domain of the revenue authorities. Wealth declarations are done elsewhere. What we get are declarations on business and maybe the assets they use to generate the wealth. But general wealth is not within our mandate. So to me, that is a sticking point. If we are to tax wealth, it means then the wealth declaration must come to us as the wealth declaration. So I will stop there maybe and let my colleague put in a few more comments.
Thank you very much, Michael. Wealth is indeed not just an economic issue, but can be a cultural aspect as well. Thank you for sharing the experience of Kenya. I want to bring in Rona to talk about the continental experience from ATAF. But just before that, few minutes from another presenter from Kenya, who will say just a few more lines from the Kenya experience, and then we'll go to you, Ronald. Philip Wairire. Mr. Philip Wairire is an advocate of the High Court of Kenya. He's currently working at the litigation division of the Kenya Revenue Authority. Do you want to add a few lines, Mr. Wairire, so that we can then go to the continental experience? Philip?
Thank you, Gerald. I don't know if you can get me clearly.
Very well. I just can't see you, but I can hear you. Go ahead.
Well, if you can hear me, that's good enough.
Thank you.
I think. So maybe from a litigation perspective, in KRA, we've got a legal department which houses the tax dispute resolutions division, under which we have the litigation division and an ADR, or alternative dispute resolution division, through which we try to mitigate some of the complexities that arise from cases of aggressive tax planning, which is a result of high net worth individuals and corporations and what they do to mitigate their tax exposure. Mr. Abdul had alluded to this, that some of these taxpayers, or rather all of them, because of their high net worth and ability to access very highly skilled legal and tax advisory services, they can really protract disputes. And to mitigate that, we've had a very robust alternative dispute resolution mechanism within our legal department to allow for engagements between the commissioner and these taxpayers, and possibly reduce the time it takes to complete these disputes, and possibly collect whatever taxes might be collectible, and use the lessons learned out of those disputes to advise policy in future. So that is the methodology that we've adopted within KRA to include the ADR component and possibly reduce the length that these disputes take to resolve. I think that pretty much sums up what KRA has done to reduce these disputes.
Thank you. Thank you very much, Philip. Kenya, they are establishing an alternative dispute resolution mechanism, indeed, to deal with the complexities around taxing high net worth individuals. Thank you for the additional submissions. We'll not take it continental by hearing from you, from experience, Mr. Ronald Waiswa from the Africa Tax Administration Forum. If you will use your time to tell us about your experience and the work that you are doing on this continent regarding these subjects on the continent. Over to you, Ronald.
So thank you so much, Andrew. I hope you can hear me. I'm not in a very good environment because I was in another workshop, and so I'm catching the conversation in a corridor as I could not secure a better room, but I hope you can hear me. Well, is that true? Can you hear me?
Yes, can hear you very well. Go right ahead.
Excellent. So thank you so much, Gerard and Oxfam, for extending the invitation to us. Of course, we struggled to accept because of a running workshop, but I'm happy that I participated, and very happy to hear about the experiences from Uganda again. I was working with Uganda Revenue Authority before joining ETAF. And then to hear experiences from Ghana. I think I also visited Ghana some time back when I think they were in the initial stages of establishing this kind of effort to tax high net worth individuals, but also to learn from experiences from Kenya. My colleague Michael, we are working with him on a larger project on Africa. And also thanks a lot to Abdul, I think, for bringing up this the presentation on the UN guidelines, which seem to suggest ideas on how to tax the high net worth individuals. Let me start by saying that the need to focus on taxing the rich in Africa is really justified, mainly because of the income inequality issues to do with the need for revenue by governments, but also issues to address issues of compliance generally for purposes of equity. Indeed, as a matter of fact, when we look at the numbers in different African countries, we see that in terms of personal income taxes, very little appear to be coming from the rich. What we see in very many countries is that most of the revenue that we can categorize as PIT is revenue that is coming from those that are in employment. In some countries, you may even find statistics as high as 98% of the PIT being coming from employees. So someone can easily argue that in terms of taxing individuals, it's mostly those in employment that are actually taxed. However, another may also argue that yes, we are not seeing revenue from the rich, but their companies are paying. So maybe they are also paying. If they were not there, maybe the companies will not be there, and therefore they will not be paying. So these are things that we need to argue and then see what exactly, where exactly is the gap. I think then for me, going back to the presentation that Abdul shared on the issue of wealth taxes, for me, I think the starting point is where exactly is the gap? Where exactly is the gap? Yes, there was a mention in the presentation by Abdul that there are no countries on sub-Saharan Africa that seem to be imposing wealth taxes, which I don't think it is true to a certain extent, but also not true to some extent. Why? Because I think I was happy to hear about Ghana, where you're introducing a 1% tax, I think, on secondary dwellings. Seems to be a wealth tax. And also something similar was introduced, I think, in Zimbabwe, and I also saw it in the chart here, which is something like a wealth tax. And it is also like a 1% similar to the case in, I think, Ghana, on secondary dwellings. I think, looking at the presentation that Abdul shared, look at the UN guidelines, you put these different sources, these different taxes in about 3 categories. You had the first category that was talking about imposing taxes on interest, dividends, capital gains, royalties, immovable property, and then movable property. That was like the first category. But what I can say is these taxes are actually there. You go to Uganda, you go to Kenya, and all these African countries, when you look at the law, you'll find a tax on dividends, you'll find a tax on capital gains, you'll find a tax on royalties, you'll find a tax on movable and immovable property. So the issue is we may only be missing the word a wealth tax in the law. But within the laws that we have in the tax administration, you'll find that there are sufficient provisions that target these different sources of income. The other categorization that you talked about is issues to do with inheritance taxes, estate taxes, and gift taxes. Maybe we need to think about this. This may not be common, but again, you may find provisions within the tax laws that point to management of inheritances, point to issues of taxing estates, and maybe issues of gifts. There are provisions to deal with that. And then the other categorization, I think, pointed to issues of net wealth taxes. Now, this is fine, but then the issue is, how do we determine the net worth in a context where most of the transactions are in cash? Just like the CDT in your Sarah shared, these are people that hide their assets in names of relatives, names of other people that are not known to within government structures. So how do you determine the net worth? So even countries that are a bit advanced, maybe the case of South Africa, they abandoned the word net because it is very difficult to get all someone's, the entire, to get that entire set of someone's wealth, and then also to determine the liability so that you can determine the word net and charge a tax on that. So we really need to reflect on these proposals. And we say, where is the gap? Is the gap in the law? To my view, and from the experiences I've gathered, and again, maybe I should highlight that these are current experiences of me. They may not reflect the experiences of others. So if you want to quote, you quote me. So in my view, it's not an issue of lack of the law. I think the gap may lie somewhere else. In my view, the gap may be in terms of administration, the administrative framework to implement the provisions of the law. And by administrative provisions, or sorry, the administrative framework, I'm not looking only at the administrative framework of tax authorities. It is the administrative framework of tax authorities, but also relevant government bodies and even maybe private institutions that can support the taxation of this segment of taxpayers. For instance, some countries, like we have heard from Uganda, Kenya, South Africa, and I think maybe Ghana, they've already put up some structures. In other countries, such structures are not there to deal with this segment. But also, even when you come to countries where they've established some networks, some administrative units of structures to deal with this segment of taxpayers, the issue is how strong is the framework? Those are things that we need to look into. But again, we also need to think about this by going beyond the tax authorities, because where the main gap is the issue of revenue administration is always left to the tax authority, but it needs a whole of government approach. Now, so when we are looking at administrative framework, we need to look at institutions that support the tax administration to effectively tax the rich individuals. For instance, you want to look at the land registry. How is the administrative framework there? Do they have processes in place? Do they have automated systems that the tax administration can access that information and use it? And does the tax administration actually have access to that information? You need to look at the richest of companies. What are their structures? In some countries, you may find that this is still manual. And therefore, we need to look at administrative framework, both within the tax authority, but also outside the tax authority in terms of institutions that are able to support the tax administration to do this. In the private wing, maybe you need to look at the financial systems within these different countries. Banks have very advanced systems, but the issue is, does the tax authority actually have access to this information? They don't. They have strong provisions within the tax laws that give them unqualified access to bank information, but data protection laws that are now common across Africa do not allow them to get access to real-time data in those institutions. And therefore, even if we push the tax authority that do this, but they don't have access to this information, we shall still not reach where we want. And actually, therefore, I've had wealth reports. I've read wealth reports. I read one that was, I think, done still with Oxfam, which is also cited here. I think you shared it in the concept note. Wealth reports usually come up with very good numbers, and numbers that I think are going to put a lot of pressure on tax administrations. They will come and say, Kenya, you can identify 7,000. Dear 7,000 high net worth individuals, and you can correct $780 million. But then the question is, where are these people? Where are these people? And then when you say, usually in those wealth reports, they quote a threshold of about $1 million. $1 million in Ugandan terms is around maybe 3.7 billion. In Kenya, it may be 130 or something like that, depending on the exchange rate. But I'm telling you, if you know, because I'm from Uganda, so I know, if you go to Kampala, or you go to Nairobi, or you go to Accra, one just having a plot of land in the city center may qualify to be a high net worth individual. So does it make sense to say whoever has a plot, a 50 by 100 plot in Kampala will qualify? So we need to look into these numbers with a lot of caution, but also with putting in context how the system is in a country where there is informality, a country where access to information is a problem. Some of the suggestions may be had. Therefore, how do we support tax administrations in this drive? One, we need to assess the feasibility of implementing the guidelines, the UN guidelines. We need to know what is lacking, what is the UN guidelines, what are the suggestions from the UN guidelines, and what is currently working, and what is currently missing. And this has to be done at a country level. So every country, every tax administration needs to sit down and try to test the UN guidelines. What is the UN guidelines actually saying? Does this thing really work in our context as African countries? So the first step, in my view, is to assess the feasibility of that UN framework by a country. It may vary from country to country. That should be the starting point. Thank you. I think I can stop there for now.
Thank you very much. How do we have you again, Ronald, so that we can keep this conversation going? I really think that this should be a beginning of a big conversation. We almost opening up for plenary, but before that, we have a very brief message from one of us who is not able to join us in person, but has a message for us. Ma'am, my producer for this show, if you're ready for that message. This message is from our director for Tax Justice Network Africa, Ms. Chenai Mukumba. She works with the TGNA, as many of you know. It's a robust network of civil society organizations that's working for a united effort on leading on tax justice voices across the continent, committed to promoting accountable and progressive tax systems in Africa, where tax justice prevails. A message from Chenai, and then we'll open up for the discussion. So colleagues, get your comments and questions ready. We are opening up for plenary shortly. Ma'am. Okay. I think we can perhaps have this played later, ma'am, if because I mean we have it and it's not going away. So if there's a bit of a technical challenge to playing it now, maybe we can hold and open up the discussion, and then we can play it later. So this is the moment, colleagues, where we get to hear from everyone that's been on the call. I'll request that when you raise your hand, let me see, I want to be able to see the people that are raising their hands. Continue to type and comment in chat so that we can be able to get as many comments and questions as possible. But before we go into that, there are some key important questions I felt I should raise with the panelists. One comment saying that there's a linkage between high net worth individuals and beneficial ownership. And there's a comment there that can you illustrate what some of the lessons might be on this connection. There's also another comment on chat again that talks about, Ronald talked about how do we determine net worth, the complexities around determining the actual net worth, showing the experience of South Africa that abandoned the word net, but also sharing some reflections on what it is that we need to do to take the conversation on forward. I think the last comment that I wanted to raise was also raised on chat here, that the question now is what is needed to move forward this conversation on effective taxation of high net worth individuals in an international cooperation context. It was raised there, what it is that we need to do going forward. But I'll open up the discussion on comments on to everyone. Kindly keep your comments and questions brief so that we can be able to use the most of the remaining 22 minutes. Questions? Comments? Do we have questions and comments, please? Okay, so you can invite them to raise. Yes, please raise your hands if you need to. Over to you, Henry. Kindly keep it very precise. Henry Ushi. Henry Ushi, kindly make your comments, and if you can direct it to whoever is best placed to respond to it, and keep it brief. Henry Ushi, can you hear me? Your hand is up, Henry. If you are speaking, Henry, I cannot hear you, but your hand is still up. Maybe it's an old hand. Yes, we also have some comments appreciating that this is a very informative conversation. There's a question there from you, Beverly Musili, to I guess the panelists can pick it up. How do you balance collaboration with other government agencies and using their data with data protection considerations? Data protection there being a very important consideration. Henry says he's speaking, but no one seems to hear him. Maybe you can type it here in chat and we'll be able to pick it up. In the meantime, as we wait for more comments and questions to come, dear panelists, if you have anything that you'd like to quickly respond to that might have come up during the panel discussion, kindly go up. Presenters, panelists, if you have anything you'd like to respond to, kindly, this is the moment.
Thank you, Gerald. If I may, I had a few responses. Okay, so I'd like to start by thanking my co-panelists for really brilliant presentations. All of them were so insightful on the country experiences. I learned a lot. I would say Sarah's presentation on the practical challenges of actually going after these high net worth individuals was extremely insightful. So special thanks to all of my co-panelists. And Ronald's, and of course, very helpful to hear from Daniel that these guidelines have been useful as Ghana is thinking about how to proceed at the policy making stage. And Ronald's presentation was really very good, and I want to thank him for his comments and to agree with him that yes, of course, many African countries have capital income taxes, have inheritance taxes. So I want to rephrase, and what I meant to say was that net wealth taxes, in particular, don't seem to have much of an uptake in African countries. But your point is absolutely correct. Many countries, African countries, do have taxes on capital income and the transfer of wealth. I also want to respond to Ronald's very important suggestion that countries should start by assessing the feasibility of these UN guidelines. And really, that is absolutely the way to go. These guidelines have not come from heaven, where the clouds parted and a document of the UN guidelines came through. These have been prepared by people. And I would like to say that at the subcommittee, we have constantly invited comments and feedback, which we can use as inputs. And I hope that in the future, organizations like ATAF and Kenya and all these countries can really share their experiences and provide inputs into the work of the UN Tax Committee so that these lived experiences, practical experiences can go into having better guidelines. And these guidelines are not a final document. They are now going to be updated from time to time. So the next membership of the tax committee will come in October next year. So this is really an opportunity for all African countries to get ready their inputs, and we can, if there's any ideas about how these guidelines can be improved, can be updated, then please don't hesitate to send these inputs into the UN Tax Committee. And I'm very happy to work with any government officials here who are interested to know the process of how to actually do it. So that is one point which I wanted to make.
Right.
Yes, and to just add to that, this is also important in context of the UN Framework Convention, because the Framework Convention is now being negotiated and similarly needs inputs from all African countries on how it can have standards which are actually of their interest. So I wanted to make that point as well. And if I may, I'll just take 2-3 minutes and quickly respond to some of the other points. One, how binding will the guidelines be once they come into effect? Are they useful in litigation disputes and their impact on tax tribunals? These are, the UN guidelines are soft law. These are options for countries to think about. And similarly, courts can kind of refer to them as they adjudicate. So these are not like the OECD standards, which some of which can be very stringent. So in that sense, these are non-binding, but of course, it's something which can be referred to by the courts. I think the colleague from Kenya, Michael Mwara, had mentioned a very important point that when you file the tax return, you don't have to give details of your wealth ownership. And we need to think about asking that from taxpayers. So this is a very good idea, really, because once you ask taxpayers to actually provide this information in the tax return, the tax administration can systematically start collecting data on wealth ownership, and this can also help better understand the wealth inequality in your country. Yes, thank you. As of now, I will stop here.
Yeah, thank you very much, Mr. Abdul, for the responses. Just pick a few more comments from chat, and then we can have our panelists respond to them. One is about how can civil society play a role? From you, Morten, how can civil society most effectively have an advocacy role in relation to promoting tax justice and taxation of wealth? There's another comment in the Q&A here. How about with appreciation, begins with appreciation and then says, a question is how a global agenda on effective taxation of high net worth individuals, such as the one discussed at the G20 and potentially at the UN on an early protocol, could be beneficial to enhancing effectiveness on high net worth individual taxation in your own countries. Keep comments and questions coming in. There's a request for Kenya Revenue Authority there to share some successes of the high net worth individuals unit, especially the revenue that the unit has collected since its inception. Panelists, if you have any more comments and questions that you'd like to respond to, kindly do it so we're moving towards concluding in the next 10 minutes. Panelists, any specific questions and comments you'd like to respond to, other than you, Abdul, of course? Sarah, Daniel, and other colleagues. Okay, in the meantime, if you want to speak, kindly raise your hand. I've been guided that once you raise your hand, then we'll give you mic access so that you can be able to speak up, and we'll be sure to speak up your voice and your question and comment. Another comment here on chat again. Just some perspective from Nigeria there, from you, Henry. I had hoped that now you can speak, but it's okay. You have shared with us already. Oxfam in Nigeria has launched a fair tax monitor study last month. focused on wealth taxation. Some of the findings include only 40 wealthy individuals are tax compliant. And with the current fiscal reforms, the Committee on Tax Reforms has proposed to tax individuals earning 100 million naira, that's about $59,000, he says, and above a 20% PIT. I like the position of taxing millionaires as well, seeing that there are only a few billionaires. A question from you, Ronald Mugobe. I think it's Mugobele. What is the threshold of high net worth individuals? Does it vary from one country to another? Good question there. My panelists, maybe to you, Ronald, if you would like to respond to that, because you talked about the complexities around determining what is net worth and what is not. I wonder if you have any reflection on the benchmark for the threshold for high net worth individuals, and if it varies from your experience at ITAF.
Yes. Yeah, so thank you so much. And I think I will pick it from what the Commissioner for DT in URA said. And I think even Michael will agree with this. I don't think there is a universal definition for purposes of tax. Wealth reports will put it at $1 million, but that is for wealth reports. But for purposes of tax, and given the levels of informality and difficulties of accessing information, there is no one definition that we can use that tax authorities can use as a threshold to define who a rich person is. And because of that, different countries are now using different parameters. Like you saw the presentation from Sarah, talking about shareholding in large companies, talking about those that are doing with large transactions, land, selling and buying of land, motor vehicles, etc., etc. So there is no unique threshold for HNW. It should be country specific. A rich in Uganda may not be rich when you come to Nairobi. A rich in Nairobi may not be rich when it comes to South Africa. And a rich in Africa may not be rich when you go to the US. So there is no, every country needs to come up with its own definition based on the information gaps that exist there. Now, on the issue of the CSO, I think for me, there is somewhere CSO can support tax administration, given the experiences in tax advocacy. I think they need to support tax administrations in accessing information, because what we see in many data protection rules across Africa, they will exempt security agencies, but tax authorities are not exempted from those provisions of the Data Protection Act. So if civil society can try to push government a little harder to see that also tax authorities are exempted from such provisions where they can have real-time access to information in all angles, that would be good. Thank you.
Thank you very much, Ronald, for your precise response on that issue. There's indeed no commonly agreed threshold for what constitutes high net worth individuals. If you have any comments and I have for some reason been able to see your hand, kindly alert me so that we can have you speak and contribute. Otherwise, you are also welcome to continue contributing through chat here. Just to see a few of the questions that are in the chat here. From you, Alejandro Rodriguez, again, the issue of a global tax agenda on effective taxation of high net worth individuals, such as the one discussed at the G20 and potentially at the UN on an early protocol, could be beneficial to enhancing effectiveness on high net worth individual taxation in your own countries. Can this work? What does anyone want to respond to this, especially country colleagues from Uganda, Kenya, and Ghana? Would this be something that would be practical in your own countries? Otherwise, also feel free to respond to anything else that may have come up during the discussion. Any responses on that?
Okay.
Yes,
Well,
Daniel, go ahead, please.
Yeah, I think that the idea of the protocol on high net worth individuals was discussed at the committee level as part of the terms, looking at the terms of reference.
Kindly get closer to your mic so we can hear you better. Yeah,
okay,
yeah,
sorry.
thank you.
Is it better now?
Yeah.
Is it better now? Okay.
Yes, yes.
What I said was that there was a discussion at the committee, terms of reference committee level. It was proposed as a protocol. initially as an early protocol. Now that is still under discussion. The idea generally would be, what does that protocol constitute? As mentioned, and I think Abdul mentioned it, and our colleague from ATAP also mentioned, some of the dividends and interest that are being looked at already exist in some of our laws. For quite a number of developed countries, they don't charge, some of them don't tax dividends, they don't tax interest. So automatically for them, that might be the starting point for them. But for those of us in Africa, it might be a different starting point. So generally, it would be determine what is in the protocol is what would it really determine whether it is better for us. But as was mentioned, our issues are more of administration and implementing what we have in our laws in taxing high net worth. That's where we have, and then the exchange of information, which is another important. And so I believe that these are things which we should look at, and I'll use that one to basically round up. The exchange of information is a very important key in identifying and taxing high net worth.
Thank you very much. Thank you, Daniel, for your responses there. Aloysius still has the hand up. Would you like to make your question or comment? Aloysius, please go ahead. Ma'am, kindly grant Aloysius access to the mic.
Hello.
Yes, please go ahead, Aloysius, we can hear you.
Thank you very much. I appreciate the presenters and what they have shared. And to me, I think it is a good topic of which we need to look at it. But to me, I would love to see it moving hand in hand with the issue of curbing illicit financial flows. Because now when we are looking at domestic way of taxing the rich, as if we are in one way or the other looking at the other fight we had or we have of curbing IFFs as something which is a lost battle. I know at the United Nations it is being pushed for, but when it comes to this one, I concur with some of the presenters who have tried to highlight some of the tax measures that are in place to tax wealth, to tax personal income tax. And to me, I think we need to look at it and evaluate it effectively. But also when it comes to using that money to address issues of inequality, we have and we will be having inequalities. We have to look at how can we check on the problem of inequality on access to some of the essential or social services, because you cannot address inequality by taxing. Let me say taxing one of the big guy, like if you use the 2% or any percentage, regardless of the other income tax or personal income tax, you will not address inequalities. And what is making it worse when I come back home to Africa is the problem of mismanagement of the revenue we have. Even when we tax the rich and we have the loopholes within effective utilization of the revenue we generate, will not be in a position to address inequalities. So to me, we need to look at the systems in place that are supposed to enable us to tax what we are supposed to tax, and then ensure that what we tax is used appropriately. Thank you.
Thank you, Aloysius. There's a comment there in chat from you, Emily, that there unfortunately could be an issue with the proposal to allow tax authorities access to this information, especially in countries like Kenya and perhaps other countries where the government and revenue authorities are not trusted by citizens to ensure that this information is only used for correct purposes. There's a lot of secrecy, the lack of transparency in the governments and the revenue authorities side, which does not help. I guess the issue of citizen trust in their governments is perhaps not just an issue for Kenya, but multiple countries. Thierry would be the last one to make a comment here before we go to our rapporteur, Beverly, to give us some key highlights that came from this discussion. So Thierry, kindly keep it brief. Thierry Faye.
Merci beaucoup, Gérald. Je pense que je tenais d'abord à vous féliciter par rapport à ce webinaire aussi important. Mon seul souci présentement, c'est de voir comment est-ce qu'il faudrait faire la corrélation entre la taxation du patrimoine et la nécessité d'investir au niveau de nos différents États. Par exemple, je prends l'exemple du Sénégal, où l'État a préféré taxer plus la dépense et le revenu que le capital. Donc le capital, c'est surtout les revenus du patrimoine liés à la fortune qui peut servir à aller investir dans des entreprises et autres, à créer de l'emploi. Et comme ça, en revanche, on va taxer le revenu, mais aussi on peut taxer également la dépense, mais pas le capital, d'autant plus que tout ce qu'il y a comme revenu immobilier et autres, les gens ont tendance à vouloir investir davantage avec ce capital-là. Donc, c'est pourquoi je me suis dit que taxer les riches, c'est bien possible. Et dans nos dispositifs fiscaux, il y a des taxations qui sont dédiées aux dividendes, par exemple aux fonciers, etc. et beaucoup de choses. Mais c'est moins taxé que, par exemple, le revenu. C'est moins taxé que la dépense. Donc aujourd'hui, et ça c'est une question pour tous les panélistes, qu'est-ce qu'il faut faire pour avoir le juste équilibre entre la taxation du patrimoine, mais également la nécessité d'investir au niveau de chaque État. C'est ce que je voulais dire. Je vous remercie.
Thank you very much, Charlie, there, making sure we don't tax the investment, but the actual wealth. I wonder if anyone has a moment to respond to it, but otherwise there's also a message of appreciation from you, Veronica Grondona, there, appreciating the rich knowledge that's coming from this discussion. Also citing an article by Anne Ogutu from the University of Pretoria that highlights some of the information that's been shared here. We also appreciate your participation in this discussion. Unless anyone would like to address the issue of how do you not stifle investment in the name of taxing wealth, unless there's anyone who wants to respond quickly to that from the panelists, otherwise we'll move towards concluding. All right, so maybe this will be a question and reflection that we can take forward. I still have a few hands up, just trying to be as time conscious as possible from the attendees. I think Aloysius, this is an old hand. You spoke about that before. The last comment will come from you, Ronald Mugobera, and then we'll move over to you, Beverly, to summarize. And as you summarize, you'll kindly put on your camera so that people can see you. But before you, Ronald Mugobera, kindly keep it precise.
Thank you very much, Gerald and the team. I wanted to find out whether we have thought about the negative ripple effect of the high net worth individuals. When you say that each country determines its own, shan't we have what I can call maybe race to the bottom, where it might affect foreign direct investment flows to the different countries, where different countries will be taking different thresholds in the interest of attracting foreign direct investments, and it might affect the other countries within the same region, for instance, within the East African region. So my proposal would be, the IMF, for instance, gave us the threshold, the debt to GDP ratio of 50% for countries like Uganda and others. Can't we have a cap or a threshold for uniformly applied to the different categories of countries? We have from lower income countries, middle income, like that, so that we have uniform tax policies.
Yeah.
Thank you.
Yeah. Thank you very much there, Ronald, for coming up with a proposal and perhaps having classifications and thresholds. I think that's going to be food for thought and will continue to inform this discussion on taxing high net worth individuals in Africa. Colleagues, you have been a wonderful audience. Thank you for joining and keeping the numbers up. Now we will move over to you, Beverly, to, in very few minutes, highlight some of the key things that came through that we can take forward, and then we'll move to concluding this discussion. Over to you, Beverly.
Thank you, Gerald, and our esteemed speakers for participating in this webinar and also sharing very incredible insights and lessons on wealth taxation. So I will only share the key learnings, and we'll make sure we share a comprehensive report after we conclude the webinar. So just to start off, I think one of the one of the highlights was there's consensus that there's an inequality crisis in Africa. And we suffer from a global system of inequality, but also from internal dynamics of inequality within Africa. Also, reducing inequality is more effective in reducing extreme poverty compared to increasing growth. So this is an area that we really need to focus on. The various revenue authorities, including Uganda Revenue Authority, Ghana Revenue Authority, and Kenya Revenue Authority, shared some very rich experiences in terms of challenges, solutions, when dealing with high net worth individuals, noting that these are people who, by virtue of their wealth, are obviously politically connected and have political alliances. So some of the key cross-cutting lessons that that various revenue authorities shared were, first of all, the use of innovation in tracking, identifying, and profiling high net worth individuals. So some of them have adopted very innovative and dynamic ways of profiling high net worth individuals, such as using online media, social media, newspapers, also relying on data from different government agencies, tracking transactions such as importation of goods, transactions conducted online or on online platforms, and also observing their lifestyles. And through that, they're able to kind of triangulate the data and piece the information together to profile the individuals. There was a really good recommendation to consider the possibility of institutionalizing wealth declaration when individuals are filing their returns. Then a key point was on partnerships with government institutions. Several of these revenue authorities are working in collaboration with other government institutions, such as the Central Bank of Kenya, or Central Bank of their country, the financial institutions and financial intelligence authorities, also the Ministry of Lands, and National Commission, which was mentioned in Ghana, where, for example, they're able to access and monitor information on payments from stamp duty. Another key learning was on the need for people management and relationship building when dealing with high net worth individuals. And this requires some flexibility in approaches, such as especially how to handle them with professionalism, discreetly, and also with confidentiality, and making sure that they feel somehow catered to. And this was noted also to be very useful in broadening or expanding the information sources to track other high net worth individuals. And it was also mentioned that these individuals may prefer dealing with high-level officers and having people who are at a level that is commensurate to their level and their net worth. Also, investing in institutional resources was a key point. For example, investing in human resources such as experts and senior technical persons, investing in data. For example, Ghana has a data warehouse, and most revenue authorities have also established a standalone unit for high net worth individuals. Evidence-based approaches were also highlighted. This was mentioned, for example, that high net worth individuals tend to conceal their sources of income and invest in top-tier legal services who are able to support them when it comes to very efficient tax planning or finding loopholes in the law, and seeing how to overcome those loopholes, and also supporting them to set up very elaborate structures. So to counter this, the revenue authorities really need to invest in evidence-based approaches so that the individuals are not able to deny or challenge the evidence that is presented to them. And many of the revenue authorities are also leveraging exchange of information from multiple sources, including, like I said, government, social media, newspapers, and other high net worth individuals, which they then triangulate with other data sources, which strengthens the credibility of the evidence presented to them. Lastly, was an interesting case that was mentioned in Kenya, which is the use of alternative approaches to dispute resolution of tax cases, which they mentioned is important when trying to mitigate the issues of aggressive tax planning, and also to allow engagements between, for example, the commissioner and the taxpayer, and reduce the length of time taken to resolve disputes, and also leverage this opportunity to collect taxes where possible. In conclusion, we need to assess the feasibility of the UN guidelines, and each country needs to come up with their own assessment and definition of wealth. We also need to assess the root causes of inequality in our countries, such as misappropriation of public funds and resources and corruption. And overall, it was agreed that adequate and proper taxation of wealth would solve most of the challenges that Africa faces, and taxation is therefore key to addressing the pressing issue of inequality. Over to you, Gerald.
Thank you very much, Beverly. Thank you. Before we sign out, I would like to request everyone to type the name of their country where they joined from in chats. I'm aware a few of us have already left, but it's always a good feeling knowing where everyone has joined us from. Personally, I'm from Uganda. I see people from Ghana, Nigeria, all countries. If you'd kindly type the name of the country where you've joined us from. Veronica, so from Argentina there. Ghana again, a lot of Ghana, impressive. Uganda as well. Nigeria. I want to acknowledge all the countries that have Denmark over there, Kenya again, a lot of Kenya, Denmark, everyone, Ghana again. I'm sorry I should have said this earlier because I'm sure a lot of us have already left, but you've been a very good audience. And again, thank you, Beverly, for summarizing some of the key issues that emerged from this conversation. I have the opportunity, I had the opportunity of moderating this important discussion with you. And until next time, we look forward to having more discussions with you. In the meantime, I promise that we will be reaching out to you as much as we can with a summary of some of the key issues that emerged from this discussion. And I hope this will be a beginning of a very important conversation. To my panelists, I want to give you special thanks for sparing your time and setting off this conversation, giving us all the detailed technical information that has involved this conversation. And to a lively audience, I thank you all. And let's keep working together to make tax justice a reality in Africa. Thank you and bye-bye. If you'd put on your video and just say wave and wave bye-bye to us, we'll be very, very appreciative of that. Thank you very much. And until next time, see you all until next time, and we will be in touch with you.
Bye, everyone. Thank you.
Feel free to log out now.
Yes. Bye. See you again. Nice meeting you.
All right.
You
It's a
too,
pleasure.
Daniel.
It's been my pleasure.
Yeah.
Right.
Thank you, Carol. Thank you, everyone.
Thank you. Yeah, some Zimbabwe there, South Africa. Awesome. Right. Yeah, feel free to log out now.